Okay, so welcome to week 4 of the Nimbus Capital weekly webinar for the Patreon folks. So for this week, right, there seems to be some interesting things going around in the market. So I will go through it briefly and to get you prepared for the coming week lah. Mainly because number one, we had a very bullish month for the first 3 weeks of January lah, and now market seems to be quieting down a bit. It seems to be pulling back a bit, and also mainly because we are quite near the Chinese New Year already. So typically, right, as we move towards Chinese New Year, the market tend to get quieter and quieter because most trader, most people who are involved in the market, will be taking less and less position lah. They don't want to be holding huge position through the long holidays and yeah. So you will start to see the market quiet a bit, and it will also be the time where I will start to give less trade setup, mainly because if there are nothing to trade, right, then you don't really need to force a trade. If not, you will end up in a very bad position lah. So that's one very important things that we have to keep in mind, because to be very successful in trading, not only you have to know when to trade aggressively. For example, in the 1st of January, we managed to get a lot of trade, but we also need to decide when we want to pull back a bit, so that when market start going down, when market is flat, we do not want our capital to be locked inside the market during this period lah. So when you see me posting less, right, try not to be thinking in terms of yeah, I pay the subscription fee, but there's nothing there. He's not posting anything. But it is also mainly because there is nothing to trade, so we do not want to force a trade lah. So I will be going through how you can see for yourself when is a good time to trade and when is not a good time to trade. So just a quick recap of my so-called my 2021 trades for the whole of January. So in total, I have posted about 21 trades, mostly in Singapore market lah, mainly because for the first 3 weeks, Singapore market seems to be doing well, and also a bit of Hong Kong here and there. And for US, unfortunately, we have only five counters. And of the 5 counters, only Sunrun managed to hit TP1. The rest are still open and they are retracing a bit. They are going sideways a bit, but mainly because US market have been typically quite flat also, as you can see from the Dow Jones and the SPY lah. So right over here on the chart, you can see that the average holding time for close trade, right, is about 7 days. So all these close trade that I add up together and I average them out, right, they comes to about 7 days. So if this total trade outcome, if I compare all the 22 trades, right, I have 8 trades that have been taken profit, 13 trade that is still open. So until now, none of our trade had hit stop loss yet. So if you followed all the trade setup during from January 1st onward, right, when during the start of 2021, you should not have hit any stop loss yet, unless you did something that is different from my trade setup lah. But of course, you are always free to choose your own counter that is not part of this 22. But if you do that, then you have to do your own due diligence on setting the stop loss for yourself lah. Um, Unfortunately, even at a $40 level, I cannot sort of entertain everyone and give stop loss level to each and every one of your requests, mainly because I do get absurd amount of messages on Facebook and even on Patreon. So on that part, I do apologize lah. So um, if you trade anything that is outside of this, right, perhaps I might be able to give you a bit of hints or some guideline. But aside from that, I can't give you anything. I can't give you anything more. 7 days of holding average, meaning on average the trades are held for 7 days. meaning when you enter, it hit TP within 7 days, but that is average, because you can see that some days it hit TP within 1 days. On some trades, it hit TP within 5 days. On some trades, the day I enter, it hit TP1. So this profit is when you hit TP1. But there will be some counter, it will take 15 days, it will take 16 days, because we have no way to predict the future. We don't know how once we enter, how long it will take. But this number will give you a guideline of how long on average does my trade holds. So currently, since we are still in the starting of January, right? We have only so far 8 closed trade. So this 8 is not really a huge number that is representative. But as we go through the year, as we add more and more trades, more taken profit and more hit stop loss, this number will become more and more accurate. So as of now, right? Including weekend, yes. So it's a simple entry date minus the TP or SL date lah. So the weekends are included. Weekends included, public holiday. Yep, public holiday also included. Okay, so yeah, so you can also see that the trades that I take. So this is for all 22 trades lah. The bottom one is for the trades that I take. So the trades that I take are in all these ticks. So all these ticks, right? I personally take the trade myself. So recently, I have entered Netflix and MMG also. I've also entered Johnson Electric H. So you can see that my percentage is not very far off from the total trade outcome. So you will see towards the end of the year, the amount that I hit stop loss, the amount that I take profit, the amount that I have open, it will be about the same number as the total trade outcome. So it doesn't really matter you follow what I trade. What I trade doesn't really matter, but if you follow all these, right, the number will be about the same lah. Okay, so I think this one I will try to go through every week, because I'm guessing that every week there will be one or two new people. So I do want to explain a bit so that they can understand this chart lah. Okay, so let's go through the fund flow. So this fund flow is only for Singapore market, because I don't think Hong Kong and US market release their fund flow, and I think they do release, but because Hong Kong and US market is very big, right? Sometimes their fund flow tend to be very segregated. They are tend to be divided, for example, by industry, so they don't really have a total fund flow like Singapore lah. So it is much harder to track. So on the Singapore fund flow, do take note that the data is lagged by 1 week. So the latest data that we have, right, is actually for previous week. Previous week as in 11th of January to 15th of January. So you will notice that for the previous week on the SDI, you can see that it is quite flat. It has been flat for last week and this week also. But however, even though the Singapore market is flat, right, you can see a lot of the pennies are running. We do actually hit profit on quite a number of our counters lah. For example, Lion OCBC have hit the TP, ISDN also have hit the TP. And we also have UMS hitting TP. Yeah, so last week we have about 3 counters that hit the TP, even though the market is generally flat. Mainly because this fund flow is more weighted. The weightage is more towards the big cap counters and the STI constituents. So things like your 3 banks, things like Jardine, Singtel, most of your REITs. So those penny and mid cap counters sort of tend not to follow this trend lah. But a general rule of thumb is when the fund flow is positive, right? The institutional, the blue line, when the blue line is positive, right? The market, in a general sense, tends to be positive also, except for that 1 or 2 penny counters that is running here and there. So those are kind of exempted lah. Okay, so we have a flat market in terms of the big cap and the SDR constituent for the last 2 weeks. And what you will also notice is that last week, the fund flow for institutional start to come down. This is the weekly one. And as we look at the cumulative, right, you can see that we are still in an uptrend. So what you see is we see there's a little break here. So as long as the institutional fund flow does not dive back down, right, I think it is still on a good way to come back to the zero level, the zero level. So currently, um, on a cumulative scale, the institutional fund flow is still on the negative side. So as it moves towards zero, right, we will be seeing more and more counters being very green. But in between, of course, there will be a small break here and there. Okay, so with that said, right, going next week, um, we do want to be cautious a bit for the reason that I stated earlier. We are closing into Chinese New Year already. So how do we sort of tell whether if the market is in a good state for trading or not? So let's quickly look at the scanner. Let me pull up the scanner. Um, so you can see here, this is the Singapore scanner. The scanner was released not long ago today, so you should have the same thing here. So there's only 4 counters that shows up in our scanner. So normally for Singapore, right, we have about 8, 9 counters, but today, for this weekend, we have only 4 counters. So the number of matches in our scanner is about going lesser lah. And let's head towards the Hong Kong scanner. So Hong Kong scanner, there's only 10 matches. Normally, Hong Kong scanner tend to have about 20 matches or 50 matches, sometimes 30 matches. But this week, there's only 10 matches. Not only there's 10 matches, right? You can see some trend forming here. For example, we have quite a bit of medical specialty and biotech showing up, medical nursing services. So we have quite a bit of trend showing up here. What you will notice is that I think sometimes during last week, there seems to be lockdown happening in Hong Kong, and quite a few medical counters are running lah. And together with that, right, we have this decrease in matches in Hong Kong screener, right? There seems to be a backlash from the COVID-19 second lockdown or somewhere along that line. So we do want to be careful when we start to enter Hong Kong counters in the coming week, especially Singapore and Hong Kong counters. And also because these two markets are much more affected by Chinese New Year compared to the US market. So perhaps in the coming weeks, right, I will be focusing more on the US counter instead of Hong Kong and Singapore. So let's take a look at US. So if we look at US, there's 9 matches, where normally US tend to have a lot more matches, about 15, 16, sometimes going 20, 30, about the same as Hong Kong. But for this weekend, we have much lesser matches on the US counters. And there isn't any big trend such as Hong Kong, but there seems to be a good variety. But what we do notice is that there is lesser number of counters showing up on the scanner. So suppose next Tuesday, when the next time the scanner will release, if we see that even lesser counter showing up, right, then it is a good time to stay out of the market for a while, mainly because of the Chinese New Year lah. So I do hope that this method, the fund flow together with the number of matches that you see on the scanner, right, it does help you decide whether to continue trading or whether to hold back a bit. So with that said, let's look at some of the counters that I pick out from all these scanner. So whenever there is 9 matches or 10 matches, right, most of you will think, oh, there's only 9 matches. It is easier to pick out the counter that I want. But what you need to know is that 9 matches mean there are lesser counters running. So when there are lesser counters running, right, even though it's easier to pick out what you want to trade, these counters tend to be companies that go against the market flow. So you do not really want to be sort of involved in them as well. So just try to be more cautious lah. As I mentioned again, generally lesser counter mean that less stuff are going up, So it is time to pull back a bit. Okay, let's look at some of the counters. So once again, STI. Let's start off with STI. So 3000 seems to be a very it's a mental barrier lah. It's what I would call a mental resistance. So the moment we hit 3000, right, a lot of folks start to sell because oh STI hit 3000 already. So so levels such as 3000, 2000, 2005, right? They tend to be very stable support or resistance that is quite hard to break. But of course, you will not always look at 3001 line like that. It tends to be an area. It tends to be a small range lah. But what we can deduce from this is also that after the market rally here, right? So this is the first week of January lah. So after the market rallies here, the market is in a break for 2 weeks. So it is quite obvious why we are taking a break here, mainly because if we look back, right? If we look back here, right? We do see that this was previously a support. So now it is retesting it as a resistance. So you can see that it was supported here. It was somewhat supported here also, although it doesn't hit lah, but quite nearby lah. Then now we are sort of testing this area as a resistance. So if we can convincingly break through here, right, then in the future, this 3000 will become resistant as well. So this is more of a long-term view, more of a macro technical analysis, I will call it lah. But of course, we are not going to make trades based on this kind of macro view, but it is just for us to take note whether the market is in a bullish state or a bearish state lah. Okay, so let's look at some of the individual counters lah. So these are from US scanner. So this is Rampart Holding Corp. So most of you ask, how do I choose counter from the scanner to trade? So typically this is how I choose. Firstly, I will see the trend. The trend need to be up. We need to see a clear sign that the trend is up. Once we have that, right, we will look at the candle itself. So this candle is definitely very bullish and it has also break through the resistance. So this will be counters that I will definitely will want to trade. So the third criteria is whether or not where will you place a stop loss when if you want to take this trade. So in this case, right, because this is a very bullish candle, this is so-called, it is because of this candle that I will want to enter the trade, right? Then you will definitely have to place your stop loss at least below this candle. So you would never ever want to place your stop loss in the middle of this candle, because once it retraces, right, you will get taken out. So what happens most of the time is that maybe in the next week, this counter might retrace, take out your stop, and then continues to go up. Then you will be like, alamak, I was correct to trade, but I got stop out. Then you are not in the trade already. So this is definitely one of the counters that I'm looking to trade. So if you are intending to go into this counter, your stop loss should be somewhere around $14. You do not want to place your stop loss right at the bottom. Also, at least give yourself some buffer, because market, right, the selling and buying, all the supply and demand, right, they don't always like fix at one price level. Just because the support is at 15 doesn't mean it will touch 15 and go, or it also doesn't mean that if it goes to 14.99, right, it will start to hit all the way down. You need to give yourself a bit of buffer. So there will be like +1 or 2 standard deviation, that kind of stuff that you need to watch yourself out. So you can think of price action as a car that is speeding and there is a finish line. So the car need to brake exactly at the finish line. So most of the time, right, the car won't stop right at the finish line itself. It will miss by a bit, it will exceed by a bit. So that's how you should look at support and resistance lah. So if the price has a momentum, right, there is no way for the price to suddenly stop straight. So that's why in market you will tend to see that price overshoot the support, then suddenly come back up, and you have a very big pin bar candle like that because price overshoot by a lot. So that's that's a very important factor that you have to take note. Never ever treat support resistance at one price level. Give yourself some buffer. So this one definitely a good pick. Second counter, Silvergate Capital Corporation. So this one, if you look at the chart, definitely uptrend. But at this level, it does seems that price is going sideways. Price is going sideways a bit. And it also seems that this candle, it doesn't really break out. It doesn't really break out above. It is still in the range. Meaning if you buy at here, but the momentum is quite good. The momentum is quite good in the sense that you can see there's a pin bar here. So this is the example of what I said. There is a support. Definitely there's a support here. But price overshoot and then recover, thus forming this pin bar candle, this hammer candle. So let's say if you are someone who buy into this counter here lah, okay, you see that wow, price go up lah, go up here, then you go and buy, and then you set your stop loss right at the support, right? You are definitely going to get hit with your stop loss definitely going to be hit by this candle. So you need to give yourself a bit of a buffer. And since this is uptrend and everything, maybe eventually the resistance can break and it will go up. But when the price go up, right, you are not in the trade ready because you choose to be stingy and then you put your stop loss right at the support there lah. So always remember, give yourself some buffer. So why do I say that this has a good momentum? Because there is a pin bar candle here. Not only that, there's a follow-up candle. So if a bullish candle have another bullish follow-up candle, right, the momentum is very strong. So it can definitely break out here. So do you see this kind of candle anywhere here? No, not really. You might think that this count, but although this is a bullish pin bar, this candle is not as bullish as this candle here lah. So this seems like much more um, chances for it to break out from this candle rather than this candle here. So the thing is, every time I see this kind of two candle combination, right, I will definitely look for a trade. So what does the scanner do to help you? So are you going to look through all 10,000 counters on US stock market exchange? Are you going to look through one by one to see whether which counter has an uptrend, which counter had this candle combination, which counter break through the resistance? No, we do not have that kind of time. We do not have the kind of time to look through all the counters on the exchange. That's how the scanner help you. That's how the scanner help you to sort of fish out a handful of counters from that 10,000 counters on the market. And that's all the scanner does. You still need to make your own input on whether the trade is worth taking, which is why the scanner tier is only $10, because for $10, the market will, my scanner will help you fish out it lessen the work for you to look through all the counters lah. So instead of looking blindly here and there, right, you have a good chunk of maybe 10-20 counters that you can focus on. So what the scanner does. So you cannot be very how do I say, you cannot be very expect a spoon-fed style in a sense that, oh, once the once the counter show up on the scanner, right, it means I must enter a trade. It is not like that, which is why whenever a lot of people ask me questions like, oh, so this scanner shows up, this counter shows up on scanner, mean I must trade, means I go in. No, it is not like that. What the scanner does is it will shortlist a few good counters and then you have to make the decision yourself. Because no matter so let's say this trade turns up, and if all of you decide to trade this, right, maybe some of you place your stop loss here, maybe some of you place your stop loss here, maybe some of you don't even have a stop loss, or maybe some of you decide to go in with leverage 20 times. So each of you have different capital, each of you have different trading style, right? Some of you might catch the trade when it goes up, some of you might get stop out. So in a way, right, whether or not you profit is still largely depend on you, which is why On my side, the least I can tell you is I'm gonna pick the counter for you, and I'm also going to give you a stop loss. So once I give you the stop loss and the counter, right, on your part, you only have to do one thing: how much lots, how many lots do you want to enter, and how many lots do you want to enter is always dependent on if the price hit the stop loss, how much are you willing to lose. So that is a very easily calculatable number lah. So in that way, right, you don't really need to even mind so much about the entry price, because it, let's say if my stop loss is here, it doesn't matter price is here, here. You just simply calculate how much you are willing to lose, and then you just enter, because as long as the stop loss is not hit, the trade is valid. Because for example, let me give you ISDN as an example. Where's my ISDN? So let me give you ISDN as an example. So a bit hindsight lah, okay. So we don't look at this rally lah. Suppose market is in a sideways moment. Let me just do this so it's easier. Okay, so market is in a sideways movement. So it is similar to here. It is in a sideways. Okay, it is in a sideways. Okay, so let's say I give a trade call somewhere here lah. Okay, never mind. Sorry. Yes. Let me try this again. Okay. Let's say I give a trade call somewhere here, because during this portion, ISDN came out on the scanner also. It is just that I decided not to give a trade call, mainly because we have a resistance here. We also have a very strong resistance here. So which is why the trade call only came out when price go up lah. But that's side tracking lah. So let's say if I give a trade call here, and I say stop loss is here 315. Okay, so this is the trade setup. So it doesn't really matter you enter here, or wherever it is. Eventually, when it fly, you will still profit. You are still in the trade. You will still profit. So the only difference is that the person who got here and the person who got here, right? The only difference is they will get this little bit of additional profit, and that bit of additional profit, right? It is not really worth your effort. It's not really worth your time to go and bother so much about how to get the perfect entry. So if you just follow the stop loss and work out your lot sizing, right? It really doesn't matter where you enter. For all my trade, it doesn't matter where you enter. As long as the stop loss is not hit, your trade is valid. So if you, so as I say, right, the only difference between someone who entered here and entered here, right, they are only getting this amount of profit because the stop loss is not hit. And eventually you will get this whole stretch lah. So it is, of course, the difference between the won't get at the bottom and at the top is that you will get that small difference of profit. So for my case, right, I don't mind that small profit. I just want my position in, and I just go and do my day job, or I do my own thing lah. So I don't really bother so much about that difference in profit. So if you are very aggravated over like how you should enter lah, how come I keep giving the same answer lah, it is mainly due to this reason lah, because I don't see entry as an important criteria, but rather I see stop loss as the most important criteria. Because if price hit the stop loss, it also doesn't matter if you enter here or if you enter here, you will have already calculate the amount that you are willing to lose. So someone who enter here, right, will probably enter lesser lot because the stop loss is further. But no matter who is a trader, right, you should be already sort of know how much you are going to lose when you hit the stop loss. And from there, right, like Like I said, no matter where your entry, it doesn't matter, because if you lose, you know how much you are going to lose. It will always be a fixed number, because it is like 1% of your 1% of your capital, 2% of your capital, up to you. And if you profit, then you will only miss out that small portion of that little thing where your entry differs lah. And it's then that amount is also not worth getting yourself stressed over lah. Okay, sorry, sidetrack too much. So come back to here. So I still think that this is a good trade in a way, something like ISDN like that. Perhaps since it is sideways, there is a chance that it can continue to go sideways before it goes up. So as I mentioned, right, there is no way for you to figure out whether it will go like that, whether it will go like that, or whether it will go like that. The only thing you can do is make sure that whichever way it goes, you are not stop out. So for this trade, I'm guessing a good stop loss level will definitely be below. Will definitely be below this pin bar candle, somewhere around here. Okay, so here comes the next portion. Here comes the next portion. Let's say your current price is here, your stop loss is here. Your entry price to your stop loss is this much. Are you able to handle this much? Are you able to enter enough? Are you able to enter enough position that the commission doesn't eat so much? Or if stop loss, if price drop from here to your stop loss, right? How much are you willing to lose? So once you calculate that out already, right? You don't have to worry about anything else. You just let the market handle. Next one. I don't know how to pronounce this company. The Azek Company Inc. Okay, so for this, right, it seems that it is in an uptrend also, and we are somewhere around the resistance here, and we does see a good bullish candle, although it doesn't break through here. It will be much better if it break through here, but it doesn't. So it is more like a engulfing candle instead. So right here, it seems like an engulfing candle instead. So you can definitely, if you want, you can buy this also, and hopefully we'll be able to get the breakout trade here lah. So if you are looking to enter that trade, your stop loss should be somewhere around $36, somewhere around this level. Okay, somewhere around this level, 36 level. So in webinar, I will give you more choices, see which one you want to enter. But when it comes to trade setup at the $20 tier, right, I will only pick one or two lah. So it really depends on which one you want. Neither is better than the other lah. It's depend on what kind of chart you prefer. So now we have 3 US counter, right? You look at this. This is the first one. Then this is the second one. Then this is the third one. So trader A might prefer this because very strong momentum, very strong uptrend. So some trader might prefer this. But some trader will feel that, yeah, this one like go up so much already, not really comfortable to chase, I don't want to chase. Maybe they will prefer this because this one still in the sideway, haven't go up yet. Or maybe some will prefer this. So I cannot really, if you ask me which one is the best, right, there is no best because each trader have their own style lah. And my style might be different from yours, so you do have to work out what kind of chart you prefer. Because when people ask me what is the best, right, the answer they are looking for is actually which one do you think have higher chance to go up. So basically they are asking me to predict the future lah, which can't be done. So you have to look at what you have in front of you rather than trying to predict what the future is. Because everything is in an uptrend, right? Chances are that the uptrend will be intact, the stock will still go up. The only question is when the stock does goes up, right, are you in the trade? So most of the time, trader don't ask themselves that question, how can I stay in the trade when the stock go up? But rather they want the exact point where they want that exact moment where the moment they buy, they want the stock to go up straight, which is it is impossible to predict. So let's move on to Hong Kong counters. This one is Venus MACD. So Hong Kong tend to be slightly more sideways recently lah, for this week. So for this counter, right, a few reasons why I like this. Mainly because we have a good bullish candle here, break through the resistance, and definitely there's another resistance coming. But because there is a good momentum happening here, right, I do believe it can go up further lah. So whether it go up further or not, I don't know. But this setup and the trend is good enough for me that I feel comfortable to go in for this. So if you want to go into this, right, it is slightly harder. Slightly harder because the stop loss is quite wide. I don't want to place my stop loss here, 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 here. Low the most closest stop loss that I can place is somewhere around 65. I will place around 65 because this is the support level, right? So I will want to place my stop loss slightly below there. I don't want to place right there also, but rather slightly below. So probably around 65 like that. So currently is $90. $90 to $65 is definitely very wide. So sometimes it is not worth to go in when the stop loss is this wide. Mainly because you either risk too much. If you don't risk too much, then you are entering very small lots that it does not make sense to enter that small number of shares lah. Okay, so this one I will leave it up to you to decide because it really comes down to whether you are you comfortable this white stop loss. So in my post, right, you tend to see white stop loss. So this is what I mean by white stop loss. There is one way to, if you like this setup and you still want to trade despite the white stop loss, right? There's one way to counteract the white stop loss. It is mainly by entering small as the price go back down. So what you can do is you can enter a small amount here. As it go down, you enter another small amount. As it go down, you enter another small amount. So all these entry, they will average out to probably, let's say, at $80. So let's say if price does retrace, right, stop loss here, right, then your average buy price will be somewhere around 80 lah, and it will go up. Then your profit is much better compared to, let's say, you buy everything here. Okay. And of course, you can, if you don't want to enter small here, you can definitely wait for everything to come down and then you buy. But you risk the chance that if price go straight up, right, then you do not have anything lah. So that is why I feel the best choice you can make is buy a bit here, buy a bit here. So if it goes up, you have a bit. If it comes down, you also have some more. Then when it rebound, right, you are in the profit. Next one, life tech. So this one definitely much better chart than this, much more bullish chart than this. So if you don't like this kind of chart, you prefer a bigger momentum, right? You can definitely go for this also. The stop loss, I would say it will be around about 420 like that, around 420 level. You can see all these are medical counter, medical counter, medical counter, medical counter. So this one slightly different, but it is rebounding from the support level here. Oh, sorry, it always happens. So for this chart, right, it is rebounding from the support level here. Okay, around 38. But like I said again, if you put your stop loss around 39 and your entry is here, right, it is extremely wide. So do you want to take this trade? Do you want for it to come back down first, or like depend on what you want? So another question that I tend to receive is, okay, let's say I say this one can trade, but what if 2 days later price come back down? Then how? Then good loss is very near your stop loss too, and you only have to worry this much of stop loss before when previously it was this much lah. But the question here is, maybe 3 4 days later price start to come back down. So you are wondering, what if come down some more? So you do not need to worry about that. If it come down some more, then you just take the loss law. I mean, it's that simple lah. But the stop loss is there strategically because it is very hard to hit there. That's why it's there. meaning the chances of it hitting there is much higher the chances of hitting there is much lower than it will rebound and go back up. You can see very good example from Razer. Razer is a very good example where price start to go back up. And you can see another example. I'm not sure how many of you are in this trade. Oops, not this. Where's the Hong Kong one? No. Wait, let me go back. Anhui Express 995. Let's see where the stop loss is for this counter. Wow, there's a lot of trade for this month. Have to scroll very far. Okay, Anhui Express. You see here much better lah. So you can see the stop loss is at 4.51, and price start to come down. It hit the second entry there, and it now seems like starting to turn back up. So the stop loss is there for a reason. Most likely it's going to sideways a bit before it goes back up. So when it start to come back down here, right, you can definitely still enter there, because the stop loss is set there strategically lah. So as long as it is not hit, right, there is still a chance for it to go back up. So the question here is not rather should you enter the trade because you scared stop loss might hit, but the question is, since price already went back down, since price already come down here, right, do you still want to enter this trade, or do you want to enter all the new trade that I'm posting? Perhaps the new trades that I'm posting, it has a better chart that you like, you might want to enter those rather than you enter this one. So that's usually the choice that you want to make lah. But of course, let's say you chose not to enter here, and it is your plan that when price come back down here, then you want to enter, then you follow your plan lor. It is that simple also. Okay, next counter. Yue Xiu Transport. Okay, this one a bit more controversial. Not controversial, but rather it's the kind of chart that I don't really like to take. But I put here also as a example to show you sort of what are the chart that maybe you might want to give it a miss. And for this chart is mainly because downtrend, short-term downtrend. Even though mid-term downtrend, but even though short-term, right, it seems like going up, but if you compare to the trend, this one sideways, this one is up, this one is also up. So if you compare those to this, right, this chart doesn't look very nice lah. So if you compare to all the other, right, I might want to take those that I mentioned earlier rather than this, because this one is more on the downtrend side. Next one, UM Healthcare. So for those who do not know UM Healthcare, right, the first trade, I think the first trade came out somewhere here, and it has retraced very slowly. It retraced very slowly. Now it is coming back up again. So this one is like a rebound from support lah. It's rebounding from support. And in terms of chart wise, it is not really a very bad downtrend. It is still in a going up here, also up. So the trend is still okay. So for this, right, for this is quite easy trade to make, because you can either place your stop loss at 5.2, or maybe if you want a safer one, right, 4.8. It is coming out from support. So sometimes a lot of people ask why my trade are all breakout. How come I don't have any other trade set up? That is mainly due to one very simple reason. It is because in the past few months, the market is quite bullish. When the market is bullish, you want to take all the breakout trades. You want to take all the trades that are running. During a bullish market time, why do you want to go and chase all those that are stuck at the bottom? So in Singapore market, um, instead of chasing running counters like high P, Franken, UMS, a lot of people are chasing downtrend counter like Semcorp Marine. So it's a very something that you should not be doing lah. And yes, once in a while, when you bottom pick a counter, you might catch a very nice trend. But the thing is, you only probably get that maybe 1 out of 10 trades. The other 9 trades you'll be losing a lot of money, and it's not worth it lah. But as the market structure change, right? As the market structure change, you will start to see other trades other setups start to pops up also lah. So this is a good example where this setup is a rebound from support rather than a breakout trade like this. Next one, U77. Okay, so now we are back to Singapore counters. So Sarin Tech actually ran up a lot on quite a lot Friday lah. So this will be a good example of, should you chase this counter? Do you want to chase this counter? So the question is, this one go up already. So you will think, yeah, don't chase lah, wait for it to retrace, then I buy. Very good plan. But what if happen like this? So will it happen like ISDN, where it goes straight up, or will it just come down and go up? So if you want to wait for, you scared to chase and want to wait for retrace, right? You will miss it when it just chung all the way up. So most traders, they try to do a lot of funny micro analysis. What I mean by micro analysis is they look at market depth, they look at the time sales, they look at all sorts of funny thing lah. They look at the counterparty, like, hey, who's buying my share, what lah, this lah. So all this, right, sometimes they work, sometimes they doesn't. In order for you to confirm something works or not, right, you need to have a large set of number. You have to do this strategy 100 times, and in that 100 times, right, how many of the time works? So when people start to do all this time sales lah, see the market depth lah, they are just they don't really have data behind the success rate. They are just randomly pulling numbers to justify their trades lah. So more often than not, right, all these are random rather than their actual cause and effect lah. So if you follow a market depth and price go up, right, sure, you will think that, oh, price go up meaning my market depth strategy is correct. But how many times do you actually execute the market depth strategy to think, to sort of determine that this is a good strategy? Perhaps it can come down to a 50-50, meaning you might as well flip a coin when you make this trade lah. So the way I go about it, right, is very simple. The way I go about it, I will look for a stop loss. Meaning the moment before you even enter a trade, you need to know how much you are willing to lose. Once you are comfortable with that, right, I can tell you money will start pouring out from the sky one, because the moment you are comfortable with losing, you'll be starting to take a lot of trades, because you already know how much you can lose, you are willing to lose. It is those times when trader don't want to lose, they don't want to, they very scared to lose. That is when they will lose even more, because they try to make a lot of analysis and strategy that they don't really know what they are doing. So for this, you need to factor two scenario. Number one, very important one, we settle how much you can lose. How much are you willing to lose? Let's say my stop loss is at for this, right, I'll probably put below here lah. I will put my stop loss below here. Okay, somewhere here. 0.375 is very low. It's very low because when the market is running like that, right, you must be able to account for the volatility. And the current price is here. Okay, so you go and work out how much you can lose. Let's say I can lose $1,000. Let's say I'm willing to lose $1,000 in this trade. Then how many lots I should buy? So if you measure from here to here, right, it's about 0.235 cents. $0.235 away. So if you do a simple calculation, you can lose $1,000 and it is 0.235 away. What you will get is you will get about 1,000 shares, meaning only one lot. Okay, you can buy only one lot. But one lot is still sufficient enough. If you feel that one lot is too small, you don't want, you want like 10 lot like that, then that is greed ready. So if you go into that greed mode, right, and you lose money, right, then that is on you ready. So you need to do the calculation in this way. You work out how much you can lose, and if you then you will come up with your lot sizing. And if you feel that this lot sizing is too small for you, right, then very simple, you go and get more capital, you go and save more, you go and find out a way to raise your trading capital. If not, then you don't take this trade. So it is when people risk more than what they can afford, right? What their capital can afford, right? That is when they start to lose a lot more money. Like it is the greed portion. So the moment I find out how much I can lose already, right? It's very simple. I can buy 1,000 shares, right? Perhaps I buy 500 here, then I will buy another 500 there. So let's say if the price start to chong up straight like that, right? I have 500 shares here. But if let's say price come back down, then I have another 500 shares and it chongs back up again. So I have account for two scenario already. If price chong up straight, I will still be in position to have some profit. If the price come back down here and chong, I'll have a second entry here. I will make a lot more money. So the difference between this is I will make small amount of money here and I will make quite a good amount of money here. And the third scenario is, of course, when it hit the stop loss, then I will lose 1,000. But that is okay because I already know that I'm willing to lose 1,000. So you are good for this trade, and this is how you should take all your trades. So that's why most of my trainees or all of my trainees, they can confidently take the trade and they profit a lot because they already mentally prepare how much they can lose, and whatever money that comes our way, right, it is like we don't really predict how is the stock going out, what profits come our way, we will take it. Okay, let's go through the last one, Baker Technology. So Baker Technology is a counter example to give you, like you can see that this is definitely a very big downtrend, and if you want to chase this, right, definitely you can chase. But given all the other choices that I have here, right, do you really want to choose this? Sure, it goes up a lot, but there are also other counters that goes up a lot with much better trend. So sometimes not really all the counters that shows up on the scanner is worth trading. You have to make a choice. Definitely this is worth trading. So even if you die want to trade this, right, you set your stop loss properly, let's say around maybe around 0.19 like that, you can still earn here. You can still earn some money here. But the thing is, given all the other choices, right, do you want this? So most of the time, what you will find is that you are going to be spoiled for choice. You are going to figure out which trade you should choose because there is simply too many. And among all the chart setup, right, you have to decide for yourself which chart setup do you like the most. Normally, I will go for uptrend charts. That is my biggest criteria. The trend have to be up lah. Then after that, I will look at candles. I will look at how far the stop loss, all these things, small one lah. Okay, so that's basically the end of today's session. So I do hope that I share some insight on how I enter my trades and how I decide whether I want to take two entries or one entries. And given the market is quite flat, we still have some potential counters, but overall I do recommend that you don't enter too many position in the coming week lah. Try to hold back your position. Perhaps maybe let's say you tend to make 10 trades a week. I mean, maybe 10 trades too much lah. Maybe you tend to make 3 trades a week. You might want to reduce it down to 1. Okay, so I will still be updating more in the coming week, so you can still look out for my trade setups lah. Those won't stop lah, but it's just that maybe I might reduce my trade call a bit, so don't be too worried about it. Okay, so have a nice weekend, everyone. Thank you.